I sort of hate the trading thinking about the yield curve staying like this, it's getting worse. I mean, at the end of the day, the economy's on pause because of this trade stuff. And there's a lot of great parts of this economy that are doing really, really well. And, I think this yield curve is not indicative of anything other than global pressures.
But even if it's not indicative of anything, if you're a bank that borrows short and lends long and you don't get anything for doing that, does that fundamentally disrupt the business model? See,
I think that's something that that's really a mistake. Banks don't really do that. I mean, a really good, community bank is going to have lots of core funding. They're not going to pay very much in interest. Mm-hmm. A lot of your viewers know that. And at the end of the day, they're going to lend to people at prime or LIBOR, which are floating. Fed's not touching those, so the spread that's here today is pretty much intact.
So you're saying that what we're looking at is not a fair proxy of the spread that they're getting in business, which is still fine. I mean, it probably could be better, though.
Well, it could be. The early gains from the Fed raising interest rates kind of disappeared. Once rates got above 2%, that was it. Banks' margins kind of settled in and are where they are. And by the way, if you're a mortgage bank, if you have a mortgage line, this business is about to take off. I mean, the refi business has been dead. Boom, it's coming back. That's real.
Yeah.
If you have securities on your balance sheet, they've just gained a lot in value. You could sell them for gains.
Mm-hmm.
And by the way,
demand. What about loan demand, which has been the one thing, even with all the stimulus for the first part of this recovery, demand was very, very weak. Is that picking up at all?
Well, that's, again, very, very interesting, because if you look around this country, the Southeast grows twice as fast as the rest of the country. So loan demand is fine in those markets. It's not so fine in tax-heavy states. If you look at the Northeast, you look at Illinois, you look at California, it's tough. People are leaving.
Yeah.
And as people are leaving, they're moving businesses. I mean, Amazon added more to Nashville as if Nashville needed even more help growing.
Yeah, it's bursting at the seams. So the names that you would want to own here, I presume, are in those kind of markets.
Absolutely. like names like a Pinnacle or a First Bank in Nashville, and lots of other small ones there, because banks that are not in Nashville want to be there. And by the way, one of the biggest themes this year, and I think it's been sort of ignored, has been a couple of big merger of equals that have been announced, and they've created a lot of shareholder value. Both deals went up on the day of announcement. It's, again, what you're looking for: smart deals, cost cutting, and you're going to see a lot more Me Too kind of deals. Last year we had two bad deals. Investors reacted poorly. They should have reacted poorly. They weren't well struck. They weren't shareholder friendly. These are the type of transactions we want to see. So BB&T SunTrust, good transaction for shareholders.